I think you will learn something new after watching this video, because when it comes to crypto trading, technical analysis is a very important aspect in becoming a profitable trader. And since on our channel here, we do post technical analysis all the time when we do give you guys updates on the top cryptos, this video we're going to switch it up and I'm going to give you 7 tips on technical analysis, the things to look for when you have a look at a price chart. So make sure you pay close attention, because these 7 things, it'll be good to have these things in your mind early. So as you grow as a trader, you've learned from the start, so you don't make those mistakes that could end up making you lose a lot of your trading capital. But let's get this video going. Now we are live. Thank you for tuning in to Currency.com's channel. I'm your host, John, at Real John Doe on Twitter is where you can find me. And if this video does help you out, as you can see here on our channel, we do often post quite a bit of videos giving you guys tips and also analysis on the top cryptos. If that's something you're interested in, make sure you are subscribed to the channel. We do look to keep you guys updated as time goes on and be your source for crypto news and analysis. And one thing that we do ask to show your support to the channel is to take 2 seconds right now to just hit that thumbs up button on this video. It really helps us out so we can continue to put out all these helpful videos for you guys. And also it helps us out with the YouTube algorithm. So here on Currency.com, there is a Learn to Trade tab where you can do quick courses on trading definitions, and trading guides and things like that. So what is technical analysis? Technical analysis is looking at historical data on a price chart and following patterns and movements in the price and coming up with an analysis on what you think will have the highest chance of happening next based on the information that the chart has given you. TA, technical analysis, is used for short-term investments because it can't determine things that can happen in about 6 months or a year, but it does give you an outlook on what move to expect next to possibly ride a trend towards the upside or the downside. All right, so the first tip that I'm going to mention to you guys and talk about for technical analysis is price action. So with price action, there are many ways to have a look at it. Most traders do use the candlestick chart. What the candlesticks are doing can give you an idea on the action that the candlesticks will be doing next. There are several different types of price action candlestick patterns, as you can see here on Google. You can look up a cheat sheet that shows you various of different candlestick patterns, but I think it's best to keep it simple and only follow a certain amount, because looking at the chart here, you can see so many different patterns, but you should only take trades in the pattern that you have in your trading strategy. And price action is something that's really important to look for when you're trading, because price action, you can never bet against it. If the price action is showing things are moving up and you think it's going to go down, it's best to always agree with price action, because price action will never have a bias or opinion. And also, majority of the time, price action will have a higher chance of being correct versus your opinion or bias. As you can see, the most recent price action, Ethereum did break down from this deep correction that we just had. Price had a double bottom with a higher low, just barely touched it. And as you can see, a bullish reversal sent Ethereum back up to that resistance level again. All right, so now you know a little bit about price action. Let's talk about number 2, which is the trend. So the trend is something that goes very well in hand with the price action. And most traders use just those 2 things to trade without any indicators or anything like that. For trend, there's 3 types of trends. There's an uptrend with the bulls, there's a downtrend with the bears, and then there's a sideways trend. Some people call it kangaroo market. Some people even call it a chop, and that is when price action is moving choppy, up and down, staying within a tight trading range. This right here is an uptrend. This is a consolidation period, as I mentioned, a chop, and uptrend continues. Uptrend, the trend means higher lows and higher highs. Downtrend, pretty much the exact opposite, is lower lows and lower highs. And it's always best to use higher time frames when looking for the trend. And also another thing to help you find a trend is looking at the moving averages. And the ones I usually use is a 21-day moving average, the 50, and a 200-day moving average. Okay, so now we have the price action, the trend. Next thing to have a look at is support and resistance levels. For support and resistance levels, those are the price levels that you're going to want to watch for either the price to sit down at and consolidate, or you're going to want to look for price to touch and have a rejection and head back downwards. Typically, price will either bounce off of support or reject from resistance. And most of the time, support will be where the price did consolidate previously or where the price did have some resistance previously. Usually when the price comes down to that level, there will be quite a bit of a battle between the bulls and the bears to hold that level, as it was an important level previously. And then depending on who can take control, price will bounce off support or it'll break support. Once price does bounce off support, it will head up to test the next resistance levels, which is usually the previous highs that it was at, or a monthly open, or a moving average. Some people use different types of things to determine support and resistance. There's various of things you can have a look at. You could use Fibonacci levels, but I prefer to use a range where the price has been consolidating for an extended period of time as a support or resistance, because that's where you know there will be quite a bit of volume and buyers or sellers. Okay, so that's a quick rundown on support and resistance levels. Now the next thing is stop losses and take profit, where things start to get a little bit more intense and your emotions start to come in. Okay, now for stop loss and take profit levels. So your stop loss is where you get out of the trade and your trade strategy did not play out as expected and price came back down to your stop loss. And your take profit is pretty much explained right there, take profit. Both can be influenced by emotions pretty easily. Sometimes your ego can come in and tell you, oh no, you're not wrong in this trade, you're right. And you could remove your stop loss or keep moving your stop loss down. But it's always good to be disciplined and get out of the trade right when your stop loss hits. Same with take profit. Some of us can get greedy when we see a trade going the way we want to. We could continue to want to let it run and not take profit, and then things would come down pretty quick and erase all of those gains. Let me show you an example here of stop loss and a take profit scenario in a trade. So we had this breakdown here at the end of March for Ethereum, and you can see price did come down to this support here that I had marked out, which was a resistance earlier in the year. So we knew we will have something bottom out here or consolidate. So if you did look for a higher low in these candles, you would have found an entry point right in this range here. So let's say you entered the trade in this range here around March 5th when price went up to cross above that 21 and 50 period moving average. What you would do is measure the risk reward of this trade with your stop loss and take profit. So your risk, you put your stop loss right below the support level. So let's say that is about 9% away. And then your take profit, you're going to look for at least a 2-to-1 risk reward ratio trade. So that would bring you right up to this resistance level, which gives it about a 3-to-1 risk reward trade, which makes it a good trade to take. So your stop loss would have been right below that support at about 1,430, because you know if price does break that support, it's going to make a lower low, which indicates a downtrend, and price will continue to the downside. But if it makes a higher low, like I mentioned earlier in this video, then that is a bullish reversal potentially, and you should look to enter a long position following with the trend. Okay, so now for number 5, the next thing that will contribute to your stop losses and take profits is momentum. So momentum is something to always look for in price action, your stop loss, and the trend. And indicators can help with this, such as the RSI and the Williams percent range, and also the MACD. Let's have a look here at the RSI with the price action. So you can see here, price did top out, RSI being overbought, and it came down to that 50 range. And the RSI came right back down to about oversold, and the Williams percent range showing the price towards oversold, meaning momentum is pushed to the downside, but the price is also sitting at a support during an oversold momentum. And now what you're going to need to look for is the price pushing towards the upside and testing resistance levels. So you can see here there was a crossover above the 21 and the 50 period moving average, and also RSI momentum started moving up to the upside into an uptrend, and also the Williams percent range started moving up to the upside, indicating the buying momentum is coming. And then there was some consolidation above the moving averages after the crossover, which indicated to look for momentum towards the upside, as everything was also coming out of oversold. And now we have number 6, something that you need to do when you do have a strategy figured out and you want to see if it will play out well, and that is backtesting. All right, so backtesting is when you go back and test out your trading strategy based on the entry signals that you have figured out to work for what works for you. Figuring that out takes a lot of factors, such as where you want your stop losses to be, what kind of momentum you're looking for, what kind of trend lines you're following, and what patterns you're looking for in the price action. So there is a lot of things you need to put together when coming with an entry point for your trading strategy. But right now, just show you guys an example. I'll show you what I mean by back testing. I'm going to show you guys the moving average crossover with RSI and Williams% range momentum. Okay, so quickly here, we're back testing all the way back to the end of 2020, December 2020. So here on Ethereum, RSI down towards oversold, Williams% range had a higher low, also down towards oversold. Price was down at the 200 period moving average. So price crossed above that 200 period moving average, which is the first indication of an entry signal. RSI also above 50 in an uptrend. Williams% range also showing that momentum is to the buy side. So let's say you were to enter there, you would back test, okay, an entry there, and where your stop loss would have been, and where your potential take profit would have been. So that would have been a profitable trade based on your entry signals that you have for your strategy. Now let's move on to here. We have another one here, another crossover of the 21 and 50 period moving average. RSI also in the uptrend, Williams% range moving towards the upside. So you back test there, another entry, look for where your stop loss would be and where your take profit would have been, and see how profitable that trade would have been. Moving on to here, same thing you look for. This one's showing the Williams% range is a bit more overbought. RSI is in an uptrend. So also you can look for another trade entry there. Stop loss below the crossover range, take profit above, and you have another profitable trade there. So basically you do look for your entry signals and back test back in time. See if you did stay consistent, how much that would have worked out for you. And there are times where your back test will fail, and back test doesn't also indicate what will happen in the future. But speaking of consistency, let's move on to the last tip. And here we have number 7, the last tip, something that is critical in you continuing to stay profitable, and that is consistency. All right, so I put consistency last because overall, once you have everything said and done and you have your TA done and your trading strategy is done, your back testing is done, what you need to do then is stay consistent with your trading strategy for an extended period of time to see if it actually plays out. One thing some traders do, they come up with the trading strategy, they try it out for 2 or 3 trades, and most trading strategies will have a losing streak of that long. And then they try it out for 2 or 3 trades, they see it's not working for them, so then they stop using that trading strategy and try to find something else that will work. But then once you switch to something else, you come back and look, you back test what you previously came up with, and you see you missed out on so many good trades because you kept trying to chase the holy grail of trading strategies when you could have just stayed consistent with what you had, following proper risk management, and you would have came out profitable. Looking here at this 4-hour chart for Ethereum, any trader who did look to buy the dips and trade moving average crossovers and oversold ranges since this bull market started, if they stayed consistent, you would see consistent profit. But if you did change up your trading plan throughout, trying to find an extra profit or something like that, then that's where you find mistakes and you start deviating from your initial strategy, which would have worked out perfectly for you. So in this video, we covered 7 tips for technical analysis. I hope this video did help you out. There is a lot more information to cover, and we will continue to give you guys videos like this right on our channel. So that's all we got for the 7 tips on technical analysis. I hope you enjoyed this video. If it did help you out, which I hope you really did pay attention, and I guarantee it will contribute a major role in you becoming a profitable trader, or even just you continuing on your trading education and furthering what you already know. Feel free to leave your comments below on your favorite parts of the video, what tips you also may have for other people or even for myself. I hope to see you in more videos on our channel. I'm checking out. I'll see you guys next time. For more trading videos just like this, please subscribe to our channel.